Welcome to the Tuesday edition of the Tech Stocks Daily Podcast, where we break down today's top tech market movers with engaging flair and a splash of humor. Brace yourselves as we dive into Apple's stock saga post-WWDC 2025. Roller coaster much? We'll unravel the tension between thrilling AI ambitions and lackluster liquid glass reactions. Then we're turning our sights to Google's big cloud move, partnering up with OpenAI alongside dynamic changes in their workforce strategy. And let's not forget HP's investor charm offensive with a juicy dividend payout. Whether you're a stock market savant or a tech newbie, we've got the scoop that'll keep you in the know. Stay tuned. All right, tech enthusiasts, hold on to your beanies because we're diving deep into the recent Apple news that's got everyone abuzz. Apple has been the talk of Wall Street lately, and not exactly for the most flattering reasons. Following their Worldwide Developers Conference 2025 keynote, Apple's stock has taken a bit of a tumble, leaving investors and analysts to scratch their heads and ponder what's next for this tech behemoth. First up, we've got Apple analyst Laura Martin from Needham, whose verdict on Apple's WWDC turned some heads. Martin wasn't particularly impressed, citing a lack of surprises and groundbreaking information at the event. Her decision to maintain a hold rating on Apple's stock while pulling back from a buy shows the event didn't charm the big guns as expected. The main feeling? More of seen it, blogged it than brand new and exciting. But wait, there's more. This year's WWDC brought along a fresh batch of mixed emotions courtesy of the liquid glass UI feature for iOS 26. While Apple executives serenaded us with storytelling about its optical fluidity, not everyone in the peanut gallery felt the magic. Twitter was alight with sharp quips about how Steve Jobs would have gone full fire and brimstone, redesigning everyone out of the building had he witnessed the spectacle. Some critics humorously likened it to rookie Photoshop mistakes splattered across iPhone screens. Oh, the internet, the beautiful battleground of opinions. On the brighter side, buried within the WWDC 2025 narrative was an overlooked gem, Apple's surging services division. While everyone was busy either gawking at or deriding underwhelming UIs, Apple's services raked in a commendable $26.6 billion in revenue for Q2 2025. This amounts to 28% of their total revenue. Who knew that pouring resources into subscriptions like AppleCare, Music, and Arcade could create such a magnet for investors, besides Tim Cook and his strategy-savvy team? Still holding out for a word on Siri, the world's soon-to-be smartest personal assistant? Well, her AI-enhanced gown has been sent back for alterations, with her revamped debut now pushed to next year. Critics wonder whether Apple's AI prioritization resembles more of a head-in-the-sand approach, but deep down, we know Siri will someday become the life coach, therapist, and cheerleader we never knew we needed. All in all, Apple's spotlight moment at WWDC 2025 turned out to be more of a flicker than a dazzling laser show. With analysts, critics, and investors biting their lips for different reasons, the company stands at a crossroads. As the lustrous liquid glass seeks redemption and Apple's foray into AI continues, investors keen on the future are staking thoughtful positions with a focus on where the service sector might head next. In the meantime, hold tight and enjoy the ride, because where Apple takes us next, only time will tell. Hey folks, in today's tech buzz, Google's been a busy bee, making headlines with major moves in both its workforce management and cloud services. First up, Google is offering voluntary buyouts to some employees in the US, specifically within its search and ads departments. With AI becoming a pivotal focal point for the company's future, these buyouts are part of a strategy to optimize resources. The Knowledge and Information team, which is crucial to Google's search, ads, and commerce operations, is a significant player here, having around 20,000 employees. It's a clear sign that Google is prioritizing AI infrastructure investments. CFO Anat Ashkenazi emphasized the importance of cost-cutting while balancing investments as AI demand keeps growing. Google's memo indicates they're giving employees a chance to pursue an exit path if they're not enthused or aligned with company goals. It sounds like they're saying, no hard feelings if you're not vibing with us anymore. This isn't Google's first time this year exploring voluntary buyouts. A similar approach was taken with other departments like platforms and devices and people operations. There's also a shift in training resources towards practical AI, showing where Google sees its future. Now to Google's big news in the cloud business. The company's shares are trading higher following a blockbuster partnership with OpenAI. Yes, you heard that right. OpenAI has inked a deal to tap into Google's cloud services to cater to the burgeoning needs for computing power as their AI operations scale. Until recently, OpenAI was a buddy to Microsoft Azure, their exclusive infrastructure partner. This new deal lets OpenAI not just diversify its computing resources, but also provides them with Google's advanced TPU-powered infrastructure, a key selling point for Google Cloud. Interestingly, Google's cloud division raked in $43 billion in revenue in 2024, and securing OpenAI as a client further strengthens Google's position in the cloud and AI market. Considering Google's proprietary chip tech or TPUs, adding OpenAI to its clientele amplifies its strength against cloud competitors like Microsoft and Amazon. Even though Google and OpenAI compete fiercely in the AI development space, hello, ChatGPT, this cooperation reflects the industry's intricate dynamics where rivals cross paths to meet computational demands. Investors seem pretty excited about the news, recognizing the long-term value addition to Google's cloud and AI ensemble. Alphabet's shares saw a bump, indicating investor confidence in the strategic moves. With Google betting big on AI and restructuring internally to support its ambitions, it's a space to watch. As they say, keep your friends close, but maybe your rivals even closer. Stay tuned for more updates, because in tech, there's never a dull moment. Hey tech-savvy viewers, let's dive right into today's HP news that has the finance world buzzing. So HP Inc., that renowned giant we all know for powering up our workstations and printing our memos, announced something that's bringing smiles to their investors today. They've declared a cash dividend of 2.894 cents per share on their common stock. Yep, HP is literally sharing the wealth with their shareholders, marking the fourth dividend payout in their fiscal year 2025. Scheduled for the big payout on October 1st, 2025, this move targets all those stockholders whose names are etched in the records by September 10th, 2025. So get ready, investors. Now you might wonder, why is this such a big deal? Well, dividends are like the gift that keeps on giving in the investment world, signaling a company's confidence in its steady cash flows and profitability. It speaks volumes when a tech juggernaut like HP, operating in more than 170 countries, doesn't just churn out innovative and sustainable devices, but also ensures their investors are partaking in its success. Whether you're dabbling in personal computing or eyeing innovations like 3D printing, hybrid work solutions, gaming, and more, HP keeps demonstrating they're a front-runner prepared to deliver on all fronts. Now back to this dividend news. It's really a fragment of a bigger picture, showing HP's stability and commitment to rewarding its loyal shareholders. But here's the kicker. Approximately 0.9 billion shares of HP's common stock are floating around out there. So imagine the scale and the significant amount of cash flowing back to investors right now. HP, already a trusted name and powerhouse in tech, with its incredible reach and innovative flair, continues to reassure its position as a sturdy hold in every investor's portfolio. All right, folks, what do you think about HP's latest move with this dividend declaration? Is it enough to strengthen your belief in its stock, or maybe entice you to make an investment if you haven't already jumped on board? When tech companies start giving out the goodies like this, it sure gets the gears turning in the minds of shareholders and potential investors alike. Whether you're a financial market enthusiast or just someone who keeps an eye on how tech firms are expanding their horizons, I'm curious to hear how you view HP's strategy today. Drop a line in the comments below. Let's get chatting. Have you been a beneficiary of HP's dividends before, or do you think now is the right time to dive in? Do you perceive this as a solid signal of stability, or are there other indicators you look for when deciding where to allocate your investment? Let's nerd out on this finance news in the comments. I'm waiting to hear your thoughts. All right, tech buffs, let's focus on Apple for a moment, shall we? Given the mixed bag of news from their Worldwide Developers Conference 2025, the question is, to buy, sell, or hold? Let's unpack it. Apple's stock took a tumble post-WWDC, which isn't always the greatest sign in the short run. Analyst Laura Martin downgraded the stock from buy to hold, citing a lack of exciting new developments at the conference. This might suggest that the current price potentially reflects a stagnation period for innovation, at least in the eyes of analysts who expected more razzle-dazzle. However, here's the silver lining. Apple's services division is absolutely thrumming along, raking in a whopping $26.6 billion in revenue for Q2 2025. Services now comprise a meaty 28% of Apple's total revenue. This signifies a strong shift towards reliable, recurring income streams through subscriptions like AppleCare, Music, and Arcade, something investors often find appealing for long-term stability. Then, there's Siri. While her makeover is a little overdue, there's potential for Apple to redefine AI interaction once she gets her glow up. Even if Siri development seems sluggish, Apple's commitment to refining its tech indicates a longer-term play and shows they're not rushing the masterpiece. Given these insights, I'd likely advocate holding Apple stock. The innovation narrative might be a shade unexciting at the moment, but Apple still has a strong foundation with its expanding services arm providing a significant financial cushion. Long-term investors might see this period as Apple silencing the doubters and gearing up for some under-the-radar innovation magic. Remember, what I think might be sparkly today could go dull tomorrow in this wild tech market. Always do your own research, weigh all market forces at play, and make those investor decisions that align with your strategy. Keep your eyes on the horizon and your portfolio diversified. Ooh, what a day in tech! Apple's flurry of mixed reactions following their WWDC 2025 keynote, combined with Google's AI-focused reshuffle and cloud coup with OpenAI, has kept the market buzzing. Meanwhile, HP's dividend delight assures investors of their stable journey forward. If today's tech roller coaster taught us anything, it's to keep watching how companies pivot and grow, especially when they're playing the long game. So if you enjoyed this rundown, give us a like, hit that subscribe button, and share the tech love with friends. And don't forget to tune in tomorrow for all the latest and greatest in the world of technology. Catch you then.